What the heck is going on with Ethereum? BTC and a few altcoins have been rallying like crazy, but it looks like ETH has been struggling to catch up. This is despite Ethereum having pending spot ETF applications of its own. Meanwhile, we've seen no shortage of Ethereum FUD from institutional investors, and some of these investors have been peddling FOMO about Ethereum competitors like Solana. That's why today we're going to bring you up to speed on what Ethereum has been up to, analyze ETH's price action, and tell you why the long overdue rotation into ETH is about to begin. I'll start by saying that nothing in this video is financial advice. It's purely educational content that's meant to assist you on your crypto quest. I'll also note that almost every member of the Coin Bureau team holds ETH in their personal portfolio, but we promise to be objective in today's analysis. I'll also say that if you're looking for a place to trade ETH, then you need to check out the Coin Bureau deals page. We have limited time offers there for trading fee discounts of up to 60% and sign-up bonuses of almost $40,000, all linked to below. Now, it's been more than 5 months since our last Ethereum update, and boy, has a lot happened since then. Shortly after that video went live, the judge in the SEC's case against Ripple ruled that secondary sales of XRP were not securities, nor is XRP itself a security. This caused ETH and other layer 1s to rally. For context, this is significant because the SEC seems to believe that every cryptocurrency except BTC is an unregistered security, even stablecoins. This was confirmed later in July when it was revealed that the SEC had asked Coinbase to delist everything except BTC prior to suing the crypto exchange. Now, the fact that Ripple won its case against the SEC means that it's probably impossible for the regulator to go after any other layer 1s, especially Ethereum. That's because decentralized cryptos are not securities, and ETH is arguably more decentralized than XRP. Never mind that the SEC itself once said Ethereum was decentralized. Now, another thing that happened in July was DYDX launching the testnet for its DEX on its own Cosmos-based blockchain. For reference, this is significant because DYDX was originally built on Ethereum. DYDX leaving Ethereum's ecosystem was therefore seen as a sign that Ethereum was falling out of favor. Just a couple of weeks later, however, Celo, a layer 1, announced its plans to become a layer 2 on Ethereum. Logically, this was seen as a sign that no, Ethereum is not falling out of favor. And since that time, we've seen a major exchange, namely Coinbase, launch its layer 2 on Ethereum and its related tech. Unfortunately, though, things started getting ugly for Ethereum in August. Some of you might recall that there was a big scare in Ethereum's DeFi ecosystem due to Curve Finance. Basically, Curve Finance founder Michael Egorov had taken out a massive loan against his CRV token holdings in various DeFi protocols. As CRV's price began to fall, many began to speculate about the possibility of contagion in ETH's DeFi ecosystem. That's because those DeFi protocols probably wouldn't have the capacity to liquidate Michael's CRV loan to make borrowers whole. The result could have been these DeFi protocols going bust. Fortunately, however, Michael managed to sell some of his CRV over the counter to DeFi whales in order to pay back some of his on-chain loans. As of September, Michael had paid off his loans on Aave, but apparently still has outstanding loans on other DeFi protocols. Thankfully, CRV DeFi liquidation risks are a long way off. On a more positive note, Shibarium, the layer 2 for the Shiba Inu meme coin, also launched in August. Shibarium has around $1 million in total value locked at the time of shooting and has dozens of dog-themed DeFi protocols. Note that this is one of many layer 2s that have launched in recent months. Another bullish development in August was the news that Visa had started testing payments on Ethereum using the ERC 4337 standard, aka smart accounts. It created a special smart contract called Paymaster, which makes it possible for Visa card holders to pay for Ethereum gas fees without needing to hold ETH. And by the way, if you're enjoying the video so far, be sure to smash that like button to give it a boost. Now, ETH's bullish sentiment continued in September when Van Eck and ARK Invest became the first asset managers to apply with the SEC for spot Ethereum ETFs. Naturally, they were inspired by the fact that the SEC is on the brink of approving a spot Bitcoin ETF and probably can't argue that ETH is a security. 1 week later, on-chain analytics firms noticed that the number of active wallets on Ethereum had hit its second highest level on record. More than 1 million wallets were active on the 13th of September, leading to speculation that ETH was about to rally again. The same phenomenon occurred in late 2022. But then came the FUD. First, Ethereum's new testnet, dubbed Wholesky, reportedly failed to launch due to a technical error. Then, JP Morgan released a report saying that Ethereum's transition from proof of work to proof of stake had been, quote, disappointing due to the lack of expected adoption. This FUD was highlighted by the fact that ETH's supply had turned inflationary due to the lack of transactions. Then, to add insult to injury, Ethereum creator Vitalik Buterin was spotted sending ETH to exchanges again, presumably to sell. Note, though, that Vitalik claims he hasn't sold for personal gain since 2018. Now, the factual FUD continued in October with the listing of Ethereum futures ETFs being a flop. All 9 ETFs saw a combined trading volume of $2 million on their first day. To put things into perspective, the Bitcoin futures ETFs experienced $1 billion of trading on their first day in December 2021. Not surprisingly, crypto analytics firm K33 Research subsequently found that institutional investors were continuing to rotate out of ETH and into BTC. Of course, JP Morgan once again took the opportunity to chime in by saying that Ethereum has become centralized because of staking, particularly liquid staking. At the same time, the Ethereum Foundation was spotted swapping millions of dollars of ETH for USDC on Uniswap. This came as a surprise given that it appears to have been the first time that the Foundation had sold ETH on a DEX. Note that it's believed that this USDC was for a developer grant of some kind. Now, if all that wasn't bearish enough, Ethereum's validator queue also came close to being cleared. This sent a signal that not many people are interested in staking ETH, something confirmed by Coinbase shortly afterwards. The exchange noted that this was likely due to the decline in ETH staking yield. Remember that for later. Anyways, at the end of October, crypto custody firm Fireblocks announced that it had found and fixed a vulnerability in ERC 4337. This announcement came shortly after Circle had announced the launch of a new feature which leveraged ERC 4337. Recall that this is the same tech that Visa was testing. A few days later, however, Goldman Sachs decided it was about time for some Ethereum FOMO. The megabank announced that it was excited about Ethereum's Dencun upgrade, as it would improve Ethereum's Layer 2 scalability and turn the Layer 1 into the settlement layer it was destined to be. More about that later. The Ethereum FOMO continued in November, with BlackRock announcing that it had filed for a spot Ethereum ETF. The asset manager argued that the SEC had no right to reject the spot Ethereum ETF application, given that it had approved the Ethereum futures ETFs. Fidelity joined in shortly after. And as a cherry on top, Consensus announced that it was working to decentralize Infura with the help of big tech companies. Now, for those unfamiliar, Infura is required for users to interact with the Ethereum blockchain. Many have argued that it's been a point of centralization on Ethereum. Well, not anymore. Now, unfortunately, this news seems to have been overshadowed by the news that the adoption of ERC 4337 had been lackluster. Bitcoin also flipped Ethereum by transaction fees due to Ordinals NFTs and BRC20s, two technologies that are leading to speculation about whether Bitcoin could compete with Ethereum. You can learn more about Ordinals NFTs and BRC20s using the link in the description. I digress. Now, other headlines that overshadowed Ethereum's bullish developments related to Blast, a controversial Layer 2 that's currently in development. Blast has been controversial for many reasons, but mainly because it's been accumulating large amounts of ETH-related assets in advance of its actual launch. At the time of shooting, Blast has more than $800 million in total value locked, most of which is ETH being staked through Lido Finance. Obviously, this has led to concerns that any issues on Blast could cause issues for ST-ETH, which could in turn cause issues in DeFi, much like the CRV concerns from back in August. And on that note, earlier this month, an early Ethereum whale was spotted sending $90 million of ETH to Kraken, presumably to sell. On-chain analysts noted that it's just one of many early Ethereum whales which have been offloading ETH lately, and chances are you've seen a few headlines about this. Speaking of which, CoinDesk also published an article this month about how Ethereum's on-chain censorship is increasing. According to Ethereum Foundation researcher Tony Varstatter, 72% of the blocks on Ethereum are complying with OFAC sanctions, a more than 3x increase since November 2022. Note that this problem is not exclusive to Ethereum. Bitcoin's on-chain censorship has been increasing too. We'll be doing a video about that soon, so make sure you subscribe and ping that notification bell so you don't miss it. Anywho, as luck would have it, the news about Ethereum's increasing on-chain censorship was overshadowed by the news that Starknet, a Layer 2, and Layer 0, a cross-chain protocol, would both be airdropping tokens to their users. This was likely a response to all the airdrops coming out of Solana's ecosystem. Fortunately, or perhaps unfortunately, the news about Starknet and Layer 0 also overshadowed the news that Uniswap had expanded to a Bitcoin sidechain, and that another Bitcoin sidechain would soon be launching. This just underscores the possibility that Bitcoin could soon compete more with Ethereum. Now, this all ties into ETH's price action, which has actually been pretty impressive, objectively speaking. Since July, ETH's price is up around 50%, which isn't as much as some cryptos, but is more than most cryptos and much more than most traditional assets. This is easy to forget when you're only focused on crypto. Even so, there's no denying that ETH has been underperforming relative to its peers. And this can be clearly seen on the ETH BTC chart, which measures ETH's value against BTC. As you can see, ETH has been in a downtrend against BTC since August, and it doesn't look like this trend will reverse anytime soon. In fact, if you zoom out to the monthly, it looks like ETH is about to paint a massive bear flag against BTC. This would take the ETH-BTC pair down to levels not seen since 2021. Now, it's extremely important to note, though, that a decline in the ETH-BTC pair does not necessarily mean that ETH will go down in fiat terms. It could also mean that ETH will not pump as much in fiat terms as BTC, and this is exactly what we've seen since August. From our perspective, BlackRock filing for the spot Bitcoin ETF over the summer is what's been causing ETH to underperform BTC. If so, this could continue until the Bitcoin ETF is approved. After that, the focus would likely turn to ETH as it's next in line to get an ETF. The approval of a spot Ethereum ETF seems guaranteed, and that is for one simple reason: Grayscale. Some of you might remember the news that Grayscale had won its case against the SEC, and the SEC didn't appeal. To refresh your memory, the SEC had rejected Grayscale's application to convert its Bitcoin trust into a spot Bitcoin ETF. The judge ruled that the SEC didn't give a good enough reason for this rejection. In case you missed the news, Grayscale recently filed for its Ethereum trust to be converted into an ETF too. Given that the SEC lost its case against Grayscale over the Bitcoin Trust conversion, it looks like there's a very low chance it will be able to reject the Ethereum Trust conversion. Otherwise, the SEC would find itself in court again, where Grayscale would likely win again. In short, therefore, an ETH spot ETF will be approved. This is why it's so odd that ETH has been underperforming other altcoins, not just BTC. Interestingly, the answer might have something to do with interest rates. As reported by CoinDesk, ETH's price appears to have an inverse correlation to interest rates, particularly long-term interest rates in the United States. This makes sense given that the main reason why institutional investors love ETH is because they can stake it to earn a yield, passive income, if you will. As I mentioned earlier, ETH's staking yield has been on the decline because of how many people are staking ETH. ETH staking yields are currently around 4%. Well, in case you missed the memo, the interest rate on the 10-year Treasury is currently over 4% and was recently as high as 5%. Lo and behold, the sentiment around ETH seems to have hit its lowest point when this 5% target was hit, and it's been improving as the 10-year yield has come down. Assuming that this has in fact been one of the core contributors to ETH's underperformance, then ETH should start to outperform once ETH staking yields are higher than the yields on US government debt. It looks like this will only happen once the Fed starts cutting interest rates, which may not be until early next year. The silver lining, though, is that ETH's fundamentals are still looking strong, despite all the headlines to the contrary. ETH's supply is deflationary, the number of transactions on Ethereum is starting to rise, and the total value locked on Ethereum's Layer 2s continues to hit new all-time highs, signaling lots of adoption. This means that it's not a question of if, but when ETH will catch up to BTC. This would translate to a gain of 10 to 20% in the short term. It's possible that all that ETH needs to catch up to BTC is a powerful catalyst. As it so happens, Ethereum has one big milestone coming up that could do the trick. This relates to Ethereum's roadmap. Although Ethereum has an official roadmap consisting of multiple categories, the merge, the surge, the scourge, etc., for the purposes of this video, there's only one milestone you need to know about, and that's the aforementioned Dencun upgrade. Dencun will increase Ethereum's scalability at the Layer 2 level by introducing EIP 4844 to the blockchain. EIP 4844 is colloquially referred to as proto-dank sharding, and it makes it possible to create special blobs of data on the Ethereum blockchain. These blobs are leveraged by Layer 2s to increase their efficiency. As I mentioned earlier, institutions like Goldman Sachs are excited about Dencun because it means that Ethereum Layer 2s will be fast and cheap enough to become payment rails. Ethereum itself will be the settlement layer for these payment rails, which will increase ETH's value as their adoption grows. Now, Dencun was originally supposed to be released this year, but was delayed back in October. According to a recent tweet by Ethereum developer Tim Bako, the Dencun upgrade will occur in January. Considering how significant institutional investors consider it to be, this should put ETH back in the spotlight. In other words, Ethereum has its own upcoming catalyst which should cause ETH to rally, along with the blue-chip cryptos in its ecosystem, namely the Layer 2s. This means we won't have to wait until after the spot Bitcoin ETF is approved or the Fed starts cutting rates for ETH to start catching up to BTC and others. Never mind the fact that the spot Bitcoin ETF will probably be approved in January. However, this assumes that the Dencun upgrade will happen without any hiccups. You'll recall that there were technical issues with Ethereum's new testnet, and vulnerabilities were discovered in EIP 4337. These were just two of many hiccups that Ethereum has experienced since the start of the year. When you include the bugs and issues on large DeFi protocols like Lido Finance and Aave, as well as the potential technical issues from the ongoing decentralization of Infura, it seems that the risk of a hiccup during the Dencun upgrade is higher than normal. If it happens, it would be very bad for ETH. This brings me to the challenges that Ethereum faces. The first challenge is regulation. This might sound strange given that ETH seems to be safe from regulatory scrutiny, at least from the likes of the SEC. Even if this is the case, the same cannot be said for all the activities around ETH that take place on Ethereum. For starters, there are regulatory concerns around ETH staking. Back in August, Bitstamp announced that it would no longer allow US users to stake ETH and would also be delisting 7 altcoins that the SEC noted as being securities. What this suggests is that ETH staking itself is still under regulatory scrutiny. Note that the SEC sued Kraken for offering crypto staking services earlier this year. And it's not just the US either. According to CoinDesk, there are rising concerns about the regulations around ETH staking in the EU and the UK. The authors note that Switzerland only allows ETH staking through banks, whereas Singapore recently restricted staking services for retail users altogether. If you've been keeping up with our coverage of crypto regulations, however, you'll know that the even bigger issues relate to regulations around DeFi and stablecoins. Both crypto niches have seen intense regulatory scrutiny. And this is a problem given that Ethereum is used primarily for DeFi and stablecoins. If you watched our recent update about Solana, you'll also know that some of its DeFi protocols have already started restricting US users from accessing their front ends. The same is true for some DeFi protocols on Ethereum. If this becomes the norm, then Ethereum and other smart contract cryptos could suffer. This pertains to Ethereum's second challenge, and that's competition. Now, as amazing as it is that some crypto projects have chosen to migrate to Ethereum's ecosystem, there seems to be an equal number that are leaving, or at least considering it, like MakerDAO wanting to create its own Solana-based blockchain. The more concerning headlines, however, relate to institutions like Visa. Not long after Visa tested out ERC-4337 on Ethereum, they decided to give Solana a go as well. Based on what Visa's executives said at Solana's Breakpoint conference, they appear to see Solana as a more viable payment rail than Ethereum. And it's not just payments either. It appears that Ethereum competitors are starting to eat away at Ethereum's market share for things like NFTs, with Avalanche apparently becoming the #1 destination for blockchain games. Now, to be clear, Ethereum and its Layer 2s still dominate these niches. But this could paradoxically become a problem in itself. If everyone is using Ethereum Layer 2s instead of Ethereum itself, then there won't be the same amount of ETH burning and buying. That's simply because the fees on these Layer 2s are lower, and they only publish transactions to the Ethereum blockchain periodically. Now, at this stage, Ethereum effectively competing with its own Layer 2s is only theoretical. In practice, however, we appear to have evidence of this happening already. Recall that the activity on Ethereum's Layer 2s is hitting all-time highs across various metrics like TVL. If this activity was all on Ethereum, ETH would probably be a lot higher. Now, Ethereum's third challenge follows on from the second, and that's centralization. The elephant in the room here is Lido Finance, which accounts for almost a third of all the ETH being staked. This is an issue that Vitalik brought to light in October, and it's something that we noted in our video about Lido. Liquid staking protocols and staking pools could essentially take control of Ethereum via DAO governance by selecting the validators they want and rejecting the ones they don't want. The good news is that this risk is mostly theoretical for now. The bad news is that this centralization is still a big issue for ETH. As I mentioned earlier, hundreds of millions of dollars of ETH is being staked through Lido Finance via that Blast Layer 2. In turn, hundreds of millions of dollars of ST-ETH is being used as collateral in DeFi protocols. An issue with Blast or another protocol which hold lots of ST-ETH could do damage to ETH. And don't even get me started on the fact that most of Ethereum's Layer 2s have a single sequencer node, making them all extremely centralized. Watch our video about Base for more info on that. Now, with all that said, these challenges are in fact short-term. Eventually, reasonable crypto regulations will be passed around staking and DeFi. Soon, Ethereum will undergo the Dencun upgrade, which will make every Layer 2 on Ethereum practically as fast as Solana, creating a crypto hydra of sorts. The centralization challenge will be harder to address given the incentives involved in staking, but it is one that Vitalik and the gang are working diligently to solve. Let's just hope they solve it soon, because once that spot Ethereum ETF is approved, the real centralization challenges will begin. And that's all for today's video, folks, so if you found it informative, be sure to smash that like button to let us know. If you want to stay informed, be sure to subscribe to the channel and ping that notification bell. If you want to help inform others, take a second to share this video with them. And if you're accumulating or trading ETH, then check out the Coin Bureau deals page. It's got trading fee discounts of up to 60% and bonuses of up to $40,000 on the best crypto exchanges, as well as the biggest discounts on the best hardware wallets. The link, of course, will be down in the description. Thank you all so much for watching, and I'll see you in the next one. This is Guy, signing off.